to shamelessly borrow from all other analysts. Nvidia Corporation, NASDAQ NVDA, is simply on fire this year. After a blowout 2016, in which NVDA returned over 230%, shares are still burning hot. Year to date, the innovative chipmaker is up over 84%, and momentum is seemingly only growing faster. While that's great news for early investors, worries about an overheated situation abounds. NVDA stock. Source: Shutterstock. For starters, the NVDA stock price has barely budged for the last several days. Ironically, the company's prior market successes hinder future progress. With shares flirting with the $200 level, it takes a lot more impetus to drive NVDA meaningfully higher, percentage-wise. From an investor's point of view, this point is significant because successful trades are judged through percentages, not nominal prices. Furthermore, the NVDA news cycle all points toward the bullish argument. This broad consensus may offer psychological security for some, but astute market participants interpret the common accord differently. As investor plays contributor Will Healy warns, potential buyers should beware the herd mentality. The NVDA stock price today, though nominally elevated, isn't completely unjustified. In fact, plenty of internal and external fundamentals support its dramatic and extended rally. Healy, though, writes, still, as famed investor Jim Rogers said, nearly every time I've strayed from the herd, I've made a lot of money. The herd is definitely on the buy side. Therefore, NVDA stock looks to be one that should be purchased with one's gambling fund. Given the 250 PE price-earnings ratios of stocks such as Amazon.com Incorporated, NASDAQ AMZN, or Netflix Incorporated, NASDAQ NFLX, NVDA could easily match that PE. The issue is that nobody wants to buy anything at a premium if they can avoid it. Based on the NVDA news that constantly pumps out bullish arguments, is now the time to go contrarian? NVDA stock must overcome significant resistance. The NVDA stock price today certainly gives value investors some pause. Currently, the semiconductor firm trades at over 56 times trailing earnings, or 147% higher than the industry median. Cheap Nvidia shares are not. 10 tech stocks that will triple. Don't throw your money away on risky tech startups and IPOs that don't deliver. Instead, bank on these 10 high-growth tech stocks that offer a high likelihood of outperformance in the near term and a chance of tripling your money by the end of 2018. You'll find their names and buy below prices when you click here now. It's at this juncture that the investing public starts to scrutinize overheated companies. Two pieces of evidence suggest that NVDA could be due for a nearer-term pullback. First, Serge Berger, our chief technical analyst, warned that Nvidia has entered into overbought territory. The most obvious gauge is the relative strength indicator, RSI, which flashed overbought for the third time this year. Back when shares sustained their extreme bullishness in May and June, NVDA eventually corrected sharply. Possibly, a similar outcome may occur soon. In addition, Berger successfully called upside movement since Nvidia broke above the $174 level. But he also issued his overbought warning after shares breached $190. Using the NVDA stock price today as a barometer, shares have gained less than 4% since Berger's cautionary note. The second piece of evidence is Nvidia's historical inability to follow through on a prior year's massive performance. The average response in the year following NVDA returning triple-digit profits is an ugly 20% loss. This year's an anomaly, as Nvidia will likely set a company record for the strongest response after a triple-digit performance. The current record is a 40% gain, set in 2000, after the stock returned over 138% in 1999.